All right, on this video, I'm going to show you the only two setups that you'll ever need to know to be a profitable trader within 90 days or less without wasting your time learning indicators, trend lines, support and resistance, W's, M's, head and shoulders, none of that, or spending tons of time watching YouTube videos trying to figure out a strategy. In case you don't know me, my name is Pedro Neves, and you may have seen me already talk about this strategy, but within the banker strategy, I'm going to show you the two setups. Now, if you've seen something along these lines, you want to learn more, please feel free to drop me a comment, click a link somewhere in the description. So let's jump into the content here. I'm just going to show you an example. This is a live example here. So one of the things we look for is basically some accumulation. We put a box, okay? We call this the box strategy. And I just want you to illustrate an example. So we would wait, and I'll show you exactly how this works. The banks basically pushed, there was a downtrend, and then there was a retracement. And this is where we would get in. This is exactly what I'm going to show you. The reason this happens, okay, is because if you're anything like me, when I first started learning, I used to use retail strategies, right? Learning W's, M's, trend lines, support, resistance, head and shoulders, things of that nature, right? Moving averages. With using our banker strategy, I don't use any indicators. In fact, you see here in the chart, I don't have any indicators. I just showed you an example that I didn't, how do we basically look for the trends, look for banker's candle, or meaning looking for smart money moves. And basically what that means is the markets are 100% manipulated by the banks, okay? Absolutely 100% manipulated. The question is, you have to understand what the banks are doing. And if you're using retail strategies, what happens is the banks know that 97% are retail traders, right? The banks also know how they can see your orders. They can see where the liquidity is accumulating, okay? And I'll show you an example what that means. And then when they see the accumulation, when basically they're building up liquidity, money, that then they drive the market one way or the other way, and then they basically create traps and they take your money. All right. Now, if you know what to look for, which using our bankers strategy, which is super simple, you'll understand, you'll see exactly how to get in, how to get out, and using any chart, any time frame, as long as you have a chart, this strategy works. Now, because the banks know, they use that against you. If you've been in the market in any amount of time, you know that the market doesn't always go in a linear way, right? It creates these ups and downs, and then create these accumulations, right? So knowing that the market doesn't go in a linear way, right? It's never straight up or straight down. So knowing that, but what we look for is for the banks to create this, it's called, right, consolidation. They create this consolidation, right? And then basically when they do this, they're creating traps for the retail traders. And if you are a retail trader, you'll see, you look at this, or we're preconditioned to look at this as to see M's and W's, right? So if you see a W, you'd be seeing this, right? So if you see a W, you would be looking to buy, right? You would be putting your stop loss, you would be getting entry here perhaps and putting your stop loss perhaps here, okay? Right, so if you saw M's, you would be looking to sell. So you'd be seeing something of this nature, right? And so let's do that. Let's just create another one here, right? So, and if you look if you saw an M, then you would be putting so you'd be selling, right? It would be selling here and putting your stop loss up here. And because what we retailers do, they see support, right, and resistance, and vice versa, right? Depends if you're buying and selling. So what the banks do, So they create these traps. These are traps. And what happens is they creating accumulation. Basically, it's liquidity and money is sitting up here, right? Just money just piling up here. Here they are, it's never a linear way, like I said before. See this as a W. Other traders have upper condition to see this as an M. So, but we, using our banker strategy and smart money concepts, what we do is we wait for the banks to show their cards. And when we see a pattern of this nature, which is this, the banks when accumulate, so they typically using our signature pattern that we called, the banks basically come and wipe your money, right? Come this way and then come the other way, right? And then what happens is, if you're buying, they wiped you here. If you're selling, they wiped you here, right? Either way, they're gonna wipe you, right? And then what happens is, the banks leave here a candle that we can identify it as a banker's candle. And usually this candle here is red, so let's make it red. And then followed by a green candle, right? Which is typically we like to see as an engulfing candle. And at this point here, we know that the banks are going to come back and to mitigate this candle right here, because they had orders that they drove the market down, right? And then they drove the market up. And then we know they're going to come back to get their money. And then once they do that, they're going to take off. And where we get in here, somewhere in here, okay? And then we ride their coattails, okay? This is one way. Now, it could be the other way, right? If you, if the banks were doing the opposite. So that would be one strategy. And I'll show you what I mean. Now, there's another strategy that we call the banker box, which is the easiest one to see for most new traders learning our strategy, is that as the banks are creating this consolidation, they will typically just take off one way or the other. They could go this way, or they could certainly go. They can go this way, or they could go, that way. Bearish or bullish. It doesn't matter. The principle is the same. So if they push the market down with a big push, you would see this would be a big candle. It could be accumulation of 2 or 3 candles, right? But you would see this just bearish, right? And what happens is, when we see this, we know that the banks got in here, right? The banks got somewhere in here. They drove the market up, and then they automatically brought the market down, big push down. And this right here would be our typically banker's candle. We would get in for a sell, follow the banks, right? Right here. This is where we would get in, and we would file the banks. Let me show you a quick example. This is exactly what one of the patterns is, right? The signature pattern. Accumulation, slightly push up, they create traps, they take your money on the way up, they take your money on the way down a lot of the times, and they come all back to that banker's candle, and then they come down again. Here's a consolidation. Here's a banker box. Consolidation, right? Consolidation, all this here, right? There's a breaker structure. I knew that the banks were going to drive the market down, up. I mean, they came back. There's a nice, this 15-minute candle here, and then they took off. Now, there was multiple entries here. There was another breaker structure on this here, and then they came back down, and then they took off. This is another one here. Some accumulation, right? There's a break out of this box here, right? Out of this box, if you drew a box here, and the box is not always pretty. sometimes, but it broke down. The banks drew the market down. I noticed on this 15-minute candle right here, there was the bankers candle, and there was a nice retracement, a flag up, and then the banks drew the market down again. Here's another example. Accumulation. This is like almost a perfect one. Accumulation. The banks just drew the market up. Look at that big candle, right? They left the bankers candle. There was a retracement, and then all the way up, and that's where I got out up there. But again, it's opportunities, and they're all over the place in the different charts. Here's another one. Is it the same one? No, this is another one right here, right? Accumulation. It's a breaker structure, and then the market went all the way up. Here another one, right? There's accumulation up, and then eventually this should have a retracement. It doesn't always happen, but if you see a nice retracement, you would identify a banker candle, and then you drive there the bank's tail. Now here's examples. If you're still wondering if this works or not, well, here's hundreds of examples of traders. I'll just go slow. You can take a peek. Here's one. Really good. My eyes are really open now and understanding the price action, the banker candles, the imbalance, and the liquidity makes so much sense. Don't need to chase the market. Made 10% on spot so far this week. Look at these. You know, I mean, I could just scroll and keep scrolling. All right. So anyway, I just wanted to show you this. You can take a look. You know, stop the video, take a look. Now, if you want to learn more about this, like I said, drop a comment, click a link somewhere in the description of this video, check your inbox, and we'll have a conversation, or I'll have my bot deliver to you the trainings. Okay. In the meantime, happy trading, and I'll talk to you very soon.